price didn't go down. Okay, so if I've got a weight, right, hanging on a balloon, pulling that balloon down, what happens when that weight breaks off? Now the balloon will launch. Okay, so that's the idea behind this divergence, is that the MACD gets pulled all the way down, but price didn't come down with it. So once the MACD then comes back up, we expect price to launch. All right, so that's the idea behind this divergence, and it's called hidden divergence because the indicator didn't make, right? I'm sorry, the price didn't make the lower lows. Okay, so great example there of what we were looking at, managing our trades while we're in live trade room today. Okay, we'll go over these every time we take trades, but I want to make sure I use that as an example today. Next up on crude. Now here's a great example on crude, guys, of just where these markets go when it's low volume. First of all, we have the high of day here on crude. We come up at 11 o'clock, we test the highs, we mark up our swing low. Now remember, guys, we have to get below this trigger line here, right? So we had to get below the trigger line, and then there's our 2 steps short off the high of day. 11.02, 34 was the fill, 2 off at 4, 2 off at 1, that's 10 ticks or 100 USD. So we made $100 more on this relatively pathetic 2 steps short here off the highs. Big thing here was make sure we identify that trigger line and get below that trigger line. Okay, now this is where we got frustrated because, of course, what happened? Price reversed, came back up, tested the new highs again, right? Pushes new highs. Now, whenever we see a 1, 2, 3, 4, 5 tick new high, right? Whenever we see this new high being tried but fails, we always know that's going to be a great 2-step reversal. The problem was we had no volume. And so here was our swing low right here. We were ready for that 2-step short. We were all there watching, right? You guys are with me there this morning. But what happened? We had no speed, no volume, no nothing. And so my words were, I can't risk this, guys. The volume's too low, and I chose to skip it. Well, of course, just like every other low volume day, we get the initial move, and then the volume steps in, right? So this is a frustrating move here, but guys, a nice big 2-step pattern short. A couple of you guys grabbed this trade for a nice big winner there to finish up your day, but I skipped it, obviously. The best thing we can do here, guys, is know your limitations. Know the fact you got some money in your pocket, right? We had $430 in our pocket at this time, guys. We didn't want to take any money out of it for the weekend, right? Buy ice cream for the kids this weekend, right? So we didn't want to put too much risk in the market. This is a great example of sometimes the volume, the rules confirm late. It's all because of that low volume, guys. Hey, those things happen. We'll wait for it. But we made money on the first one. Had to skip the second one, though. Like I said, guys, we'll be back on Monday morning. On Monday, though, I will take that trade. Right? On Monday morning, we will take that trade. Now, over on Euro. Now, on the Euro today, we saw a nice 2-step pattern. Now, I want to show you guys something here on the Euro. This is a 60-minute chart. Now, guys, just like we did yesterday, whenever the price gets a little bit slow, right, things start moving slowly, we move from a 1-minute chart, we start moving slower, right, to a 10-minute, to a 30, right, and then over to a 60, right? So we're now looking at a 60-minute chart, and we can see here we came up, we bounced off the highs, came down, made our swing low here, and then we're looking for a break below that swing low for our 2-step pattern short. Now, this is on a 60-minute chart, so this, of course, will encounter 3 or 4 days worth of price action here. Okay, very wide, slow time frame. So, of course, we plotted out our targets, half off at 49, quarter off at 29, right? So we planned everything out. Okay, everything is planned out ahead of time. But, of course, we never really got a chance to take it because here's what happened. Once we saw the break below 66s, right, because 66s here were going to be our trigger, we then zoomed in on a faster time frame. Now, we talked about this in the room today. Whenever we take trades on a 60-minute chart, okay, on a 60-minute chart, I'm not going to take a pattern on a 60-minute chart. All right, I will zoom in onto a 1-minute, or in this case, a 4-range chart, maybe an 89 tick chart, right? That'll work as well. But you'll zoom in on a very fast time frame now and look for an entry pattern. Okay, so a 60-minute chart will take a long time to get that confirmation. I'm going to look for the broad pattern on the 60-minute chart and then zoom in 1-minute, 4-range, 89 tick, and then look for my entry pattern on the fast time frame. Now you'll see here we came down, we tested these 66s, right? The 66s were the level we were looking at on the 60-minute chart. So once we broke the 66s, we then said, oh, watch out, trade's going to happen here. Let's zoom in now on a 4-range and let's look for a break of those lows here. We never saw the break, in this case, of the 62s, so instead we looked for a reversal. We marked up our swing high up here. We break above that swing high. But guys, look at this chop and slop here, back and forth. By the time we saw the two-step pattern trigger, it had been very slow and very sluggish here. And we got the trade. We actually took the trade. I wanted to take as much activity as I could for you guys today. But boy, once we got in the trade, things slowed down. We saw the momentum indicator curl against us and decided to have this trade for a scratch trade. I probably could have held it for a profit, but obviously this late in the morning, guys, I didn't want to have any excuses to ruin this Father's Day weekend. Nothing worse than giving back half your money on a less than profitable trade or a low percentage trade late in the morning on a Friday, guys. So buttoned up tight. I took my trade off the point of entry for a scratch trade, and I'm very happy, of course, with 37 ticks or 438 USD, guys. Finishes up a great week here in the markets, guys. We did over 3,500 bucks. That's over 350 ticks this week, guys. A wonderful week. Great way to end the week, guys. And let's prep for Monday, June 21st. Now, we have no news on Monday, June 21st. Now, tomorrow being Saturday, it's when options expire. Now, on Monday morning, all the traders come back and they'll then begin to rebalance. So the first hour from 9 o'clock till about 10:30 on Monday morning, we're going to see what they call rebalancing. Rebalancing is when, right, remember, they got prepared for OPEX on Saturday, and then now the traders get back to work on Monday morning. So the first hour might be a little bit rocky. We'll be here to trade with you guys on Monday morning. And on Monday, we'll do another special webinar on a custom trade plan for one of our members. So be here on Monday. We'll talk about custom trade plans at 11:30 a.m. We'll have lots of time for question and answer, guys, and we'll show you guys what that rebalancing looks like on Monday morning. So come out and join us, 7:45 a.m. Monday. We'll do webinars next week on Tuesdays and Thursdays. The beginner course, guys, is perfect for all you new traders out there. The beginner's course is a firm foundation of knowledge for entries and indicators we use. Our morning routine, guys, all the slides we have in our trade room are in the beginner's course. And that firm foundation in the beginner's course will then be used in the advanced course to make money every day with us. For more information, guys, drop us an email, sales@schooltrade.com. Guys, I want to wish all the fathers out there a happy Father's Day. Travel safely out there, guys. Come back and see us on Monday morning. My name is Joseph James. Right, have a great weekend. We'll see you guys back here Monday morning, 7:45. Bye-bye for now.